Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dr. Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, to discuss if Nasdaq 100 performance is an important indicator and what it's telling investors about the health of the stock market right now. And Russell, we just came to the end of what was a pretty wild first quarter, and you're always focused on Nasdaq 100 performance. Is it still an important indicator in terms of the overall health for the market?
Oh, I must. First off, I just want to compliment you on how well you do the title of my professorship here at IU. There's so many words in there, and I'm just very impressed you always get that right. So as far as the NDX goes, we just came off of a great quarter, up a little bit over 20%. The last time we had a really good quarter like this was back in, and everybody thinks of 2020 and dreads it, but there were a lot of Nasdaq components that did very well in the second quarter of 2020, and we were up almost 30% at that point. It also, and this is something that I really do focus on with respect to NDX, is its relative performance to the S&P 500, and it outperformed the S&P 500 by just under 13.5% this last quarter. And the last time that happened was the first quarter of 2009. And I only think about half the people in the industry now were around back in 2008, 2009. But those of us that were around do recall that after we bottomed out, the equity indices all kind of bottomed out in March of 2009. It was a March, or I guess it was just a straight line up through the end of the year. Everybody kept waiting for some other ball to drop or shoe to drop after what we'd experienced in 2008. But that dramatic outperformance that we just got, I think it's bullish for stocks across the board.
Yeah, the Mark Haynes low, I remember that fondly. And of course, you don't have the financial exposure to the index, which, just having gone through another financial stress within that sector makes sense. Does this give us an indication for stock market performance for the rest of 2023?
Oh, absolutely. And when, and I'll put on my academic hat here for just a second, when you talk about the best sectors to be involved in at different parts of the economic cycle, technology is what you want to get exposure to as the economy is bottoming. And I know we haven't officially said we're in a recession yet, but I do feel like the first quarter we did experience a lot of slowing economic conditions. There were lots of major layoffs. And at the same time, tech stocks did extremely well. So those two things together lead me to believe that we're out of the worst is behind us for the economy. And I think, stocks are going to continue to reflect that over the next few months.
In the near future, what are you focusing on?
Well, we always care about the employment number. I'm benefiting from last week. All I did was talk about macroeconomic stuff in my classes. And we get the non-farm payroll number on Friday, which is not just employment, but also gives us some peeks at inflation and productivity, et cetera. So it's the first look at the economy back in March. And that'll give us a lot of insight. But then also something I'm really think that the market's going to be waiting on is the first quarter earnings announcements, and not necessarily what companies did during the first quarter, but what they think they're going to do over the balance of 2023. And I don't think it'll take a whole lot of bullish comments to get stocks to move to the next level to the upside as management talks about what they think 2023 or how 2023 is going to play out.
Well, what's interesting as well, too, the NFP comes out on Friday. We are actually off on Friday, even though the federal government isn't. Does that mean, I know when there's 3-day weekends, options markets tend to move a little bit differently than they would versus a regular weekend. Does that make any difference because the market's not open, but NFP comes out?
It's kind of interesting. And now that we have daily options, this will be one of the few times that this has happened. This only happens about, I think it's like every 4 years and then 6 years, then 4 years or something. So it's very, very rare. I do know some of the futures markets will be open, so we'll be able to see some reactions around that. But I would caution people with respect to the liquidity in those markets at that time. A lot of people are taking Friday off, and I've seen some pretty wild moves around the non-farm payroll number. As far as the implied volatility of options that expire on Monday, they come Thursday afternoon, typically you would expect a little pressure on the implied volatility on those options based on the 3-day weekend, but not when you have a 3-day weekend with non-farm payrolls coming out. So I assume, if anything, the options might be fairly expensive relative to a normal holiday weekend.
All right. Appreciate the insight as always, Russell. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.